I am Lisa J. Stocks, and I'm back to share my financial journey. Never financial advice on what you should buy, hold, or sell. Just stock market news, what I'm doing, what's working for me. When it comes to your portfolio, make sure to consult a financial professional and make choices that align with your goals. Today, I'm coming to you with one of those rare videos when I actually have to share that I have sold something in my portfolio, and it is Realty Income. Not my entire position, just about $500 so far. But before we get more into that, let's talk about what is Realty Income. It is a REIT, a real estate investment trust, known as the monthly dividend paying company. That's what they are known for, that steady, consistent dividend. They are still a solid company. They are still collecting their rents and paying out that monthly dividend like clockwork. They have over 1,500 properties under lease. Their clients, their portfolio is full of familiar names like Walgreens, 7-Eleven, Walmart, BJ's, and CVS. Because of those great clients that they have, their occupancy rate is 96% and above. They recently reported earnings. Their revenue went up. They made more money than expected this quarter, which shows the business is still healthy. They're also expanding into Europe, which could be good for the long term, but expansions take time and money. So, looking at performance of Realty Income over the last 5 years, it's down 4%. I wanted to zoom out on this one to get started with because I'm starting to cut it from my portfolio. I've been holding on to it for quite a few years now, a position that I built up to over 100 shares, but the performance has been disappointing. I'm focusing on growth. That dividend payment is not enough. About 77% of the analysts are currently rating this as a hold, which basically means the company is good, but they don't expect big growth right now. Realty Income is steady, it's reliable, but it's slow. It's great if you want a monthly dividend coming in, if you want to just hold it for the income. Not so great if you want some growth paired with those dividend payments. And for me right now, I think that's a better move for me to shift to growth. And then later down the road, if I want to move my money back into something like this for that steady, reliable income, I'll make that adjustment. So that is where my mindset is right now. Yes, I love dividends, and I've only sold about 7 shares in my portfolio over at MooMoo, and I'm going to sell 4 more that I have in another portfolio. So about $500 that I'm going to get started dollar cost averaging into some of my smaller growth positions that I want more exposure to, that I see the potential in. I've also turned off the drip when it comes to Realty Income on those 105 shares that I still currently hold. Let's take a look at some of those companies that I'm going to be building up my position into. I started with my first 2 investments, just $10 each, into something new this week, and that was AMD, Advanced Micro Devices. So I'm filming this during the Thanksgiving holiday. It ended Wednesday up 4%, but this investment has recently taken some dips. But zooming out to the 5 year, it's up 146%. The recent drop that it had made me want to take this time to get started building my position. AMD makes chips for AI, data centers, and cloud computing, those fast growing areas that I want to have more direct exposure to, which is why I've also incorporated NVDA and Taiwan Semi into my portfolio. These areas are thriving. So compared to Realty Income, it will be paying me now, but in the long run, Some of these growth stocks that I'm incorporating into my portfolio could pay me much more later. Analysts expect AMT to continue growing over the next few years, some even predicting that it could double by 2030 if AI growth remains strong. Taking a look at analyst ratings, I'll just use the average for now, $288.19 when it comes to the 12-month forecast. So that's about a 35% upside and potentially more if it gets towards the higher price targets of about $377. So why are the analysts rating it like this? It's because these companies need these chips. Every cloud company needs chips. Everything related to AI needs chips. Every data center needs chips. And AMD is one of those companies building the chips. So the demand is rising fast. Taking a look at a couple of other smaller positions that I have in my portfolio, I just have a few shares of Meta, which has a 92% rating as a buy, an average price target of about $861 over the next 12 months. So that's a potential of at least 30% upside. And Microsoft, another smaller position, only 4 shares currently in my portfolio. 97% of the analysts rate this a buy with an average price target of $631. So another one with a potential of about 30% growth in the next year. Unlike Realty Income, up 7% year to date, and going by the analyst ratings, potentially could move up to about $62, another 7% growth over about the next year time frame. So Microsoft, Meta, and AMD are areas that I want to build up. But seeing what I've already achieved with companies like Google and Apple, for example, the growth as well as the very modest dividends that I received from some of my growth stock would have had me with more significant gains. So I'm going to be continuing to make this shift, moving money out of some of my dividend paying investments and more into my growth stocks, putting more focus into building for the future, not just that slow, steady income. So I'm betting on the future of AI, cloud computing, and semiconductors, bringing more growth to my portfolio than $300 or so yearly from those dividends. So make sure to leave me some comments. Let me know your thoughts. Have you been doing anything similar when it comes to your portfolio? Depending on your age and your goals, do you feel that you have too much money sitting in investments like SCHD and Realty Income that you can come back to investing into later in life? Right now, I want exposure to companies that I'm seeing have room for growth. I want to get on track for that growth to outweigh the income that I'm not currently tapping into. So I know investments, like I shared, are going to be more volatile than just having my money invested into Realty Income, but I have patience and can handle the swings. I'm always keeping a close eye on my portfolios because my goal here is to make my money make more money. Dividends are nice, but if AI continues expanding, the potential growth in my portfolio will be so much more impactful. I'll still be keeping an eye on Realty Income to see if they can expand into Europe, continue growing their rental income. But I'm making this shift because I expect that AMD and the other names that I mentioned will have more growth over the next 3 to 5 years. So if you're new here, again, I am Lisa J. Stocks. Make sure to like, subscribe, hit that notification bell, hype this video, check out more of my videos and live streams. Make sure to drop me some comments or questions. Check out my referral links as well as channel membership. Thanks for watching. Okay, bye.